Ladies and gentlemen, apes and apettes, welcome back to the channel. Now, AMC stock here today is looking beautiful, up about 2.17% in a very choppy, turbulent market. This is showing a lot of resilience, and technically speaking, when you look at the charts and you have the things plotted out that I do have, this rally looks to be very much intact, but you're not really getting a lot of help from the broad market. So a lot of stocks are down a lot today, right? Look at your portfolio. If you're invested in anything besides AMC, some stocks, your tech stocks, your speculative stocks, they are down a lot today. AMC is up 2.37% at the time of recording this video, looking very strong. And we're going to take a look at the charts here in this video, but we're going to talk about the dollar, the bonds, news from the real estate sector, as well as some Fed speakers earlier in the day that did cause a little bit of this push and pull movement, to the upside, to the downside. Overall, we got a lot to talk about, guys. So let's get straight into it. We're not going to waste your time. We're going to look at everything AMC. So stay tuned. In the meantime, hit that like button and subscribe to the channel because it is free 99 and it has not yet seen the inflationary effects of bad fiscal and monetary policy. Now, let's get straight into it, guys. So first things first, we got real estate data that came out earlier today, and that's what really caused the big drop you've seen in the morning and really that first flush out in the markets. It says home sales fell for the 9th straight month in October as higher mortgage rates scared off potential buyers. Home sales declined for the 9th straight month in October. Sales of previously owned homes dropped 5.9% from September to October, according to the National Association of Realtors. This is the slowest pace since December 2011, with the exception of a very brief drop at the beginning of the COVID-19 pandemic. So there's a lot of good and bad when it comes to this, right? The Fed, they want to see housing, coming down and the housing market really softening up a lot. But on the other hand, you're really slowing down lending, which is seen as bad for the economy. When people can't sell their home as easily, when people are not perceivably making as much on their home, they tend to spend less money, and that tends to be a leading indicator for most recessions. So that's what you're really seeing today is the push and pull between how long is the Fed going to raise rates, what's going to happen with that, and when do we essentially go into a recession, and how deep is that going to last. Now, a lot of this negativity is also spurred from last night's Fed Buller's comments. He said the terminal rate is in between 5 and 7%. The markets have not heard 7%, especially from a Fed speaker, at all. So when Buller came out and said that, it definitely caused a lot of fear in the markets. But then early, wide-eyed, bushy-tailed here in the morning, Fed Collins expressed hope that inflation can be tamed without hitting jobs. And it says Boston Fed President Suzanne Collins expressed confidence that policymakers can tame inflation without doing too much damage to employment. Restoring price stability remains the current imperative, and it's clear that there is more work to do, she said. So if you're not going to hit employment, then that means a soft landing, essentially saying that there's hope for a soft landing. And that's something the market's definitely latched onto. The NASDAQ was up 1% in pre-market, literally gave it all up once we started to trade, and now we are down 0.38% at the time of recording this video. Now, let's dive into some other things, guys, and let's look at the dollar first. And the dollar is break even on the day. It's really not much of a move, so not too much to actually say there. But if you look at TLT is in the red, and it was going down for most of the day, which means bond yields were going up, and that's obviously not a good thing for the markets, right? When TLT drops, or on days where TLT is red, that's not good. That tends to be your largest down days in the markets for 2022, is when you get a down TLT it also pulls down the markets because those bond yields, like I said, are going up. Now, you have seen a little bounce in TLT, which has been good, and it has really relaxed mortgage rates, bond yields overall. But you really want to watch right here. This seems to be a key level. If we do break down and continue to go lower, it's not going to be a good thing for the stock market. Now, if we can bounce up, as you guys can see, there's a lot of room to bounce up, but we need some more bullish data coming out that is showing inflation is coming down, or Fed speakers that stop talking so aggressively, guys. So there is that. That's really the dynamic that is playing out here in the markets. We're coming off of good retailer earnings as well. So that's why some of the best performing stocks today are your retail kind of stocks. People are still going out. They are still spending money. And AMC is a great example of that, because look at, Wakanda. The first opening weekend was literally the best food and beverage sales AMC has seen in its 102 years of business. I think that in and of itself is a very good reason to be more bullish on AMC, but you're also seeing some shorts, a small degree of them, maybe about 1 million total in this whole rally, that have covered on their short positions. Good thing is you still have 103.79 million shares that need to be covered. So if you extrapolated that, you would put AMC in the hundreds of dollars if all the shorts did cover. Now, the problem with shorts, and the problem shorts are going to face, is there's a very high days to cover. There's not a lot of volume. So on one aspect, this rally could last a long time if a lot of shorts want to get out of their positions by just slowly covering and driving up the price of AMC, or if there is a big event or a reason or something else, the markets turn bullish for whatever reason it is, and the stock goes up and shorts want to get out in a big way very soon. That's where you're going to see a very explosive move to the upside. Now, let's take a look at the cost bar rates, guys, and it looks like there's 350,000 shares available with a 50% cost to borrow rate. Cost bar average sitting at 57.12% and the cost bar max at 83.42%. But what's different today is the cost to borrow minimum is now at 45%, which is more in line with what we're actually seeing with the live short interest data that we are getting from Interactive Brokers. So this puts a lot of pressure on those hedge funds. The cost to borrow rates are not pretty if you are trying to take out short positions or to even cover on those short positions. It's just not that pretty. Now, as far as the option activity for the day, you're sitting on 5 orders totaling about $500,000, positive order value of 18%, which is obviously not such a good thing. But we'll have to wait and see how the day does wrap up. It looks like a good mix of put and call activity. Just some of the puts that you see on AMC are very large, so it definitely skews that positive order value. Now, as far as options, on the call side, you have about 65% of total open interest that is held in the call side, 35% of open interest held in the put side, expiring by the end of the day today. So when I think about that, I think there's probably a lot greater of a chance that AMC rallies into the close than actually sells off into the close. But a lot of it might have to do with how the markets do move. Now, for next week, the open interest, 67.73% of it is on the call side, 32.27% is on the put side. So there's obviously a lot of people feeling bullish about AMC in this next upcoming week. And that is definitely a good sign, right? It's not something you should base your whole portfolio on or a big trade on. But when you see the calls higher than the puts by a 2-to-1 ratio, especially for next week or for any really option expiration on any stock, that's typically going to be seen as a bullish thing, and you're probably going to get a bullish outcome because of that. And if you look at the Stocko tracker data as well, and look for next week, you're at 15,000 for calls that are in the money and about 70,000 for calls that are out of the money. So what I want to watch for today is how many of these options, that a lot of them did go profitable in this last week, how many options are rolled over onto the new expiration that will be obviously next week. If we go ahead and take a look at the option activity that we are seeing as of right now, and go ahead and change the expiration to next week, you could see there is a lot of open interest that is just outside the money. Same story as this week, really in between the $8 and the $10 strike as well. So I do think a gamma squeeze is still likely into next week, and especially next week as we do get, less earnings, less economic data, really not too much that can come out and be bearish besides these Fed speakers that like to open their gullets and keep the markets down. Like, that's exactly what they're doing, guys, is they don't want the stock market to rally. So they're coming out and they're saying whatever they can. They're saying the terminal rate might go to 7% just so we don't see a market rally. Now, nonetheless, the volume for these $8 to $10 strikes for next week is also in the thousands, so that is showing a lot of interest for those options. Guys, that is going to be all for this video. Hit that like button and subscribe to the channel. Source your comments, questions, or concerns down below in the comment section. Thank you for watching, and I will see you in the next one.